So, what are the biggest reasons you're seeing people move to Florida right now?
The main thing is what's going on politically, what's going on in other states. That's really the main reason. And then also, I would say no state income taxes. So there's a lot going on. We see a lot of people coming from the West, so and the Mideast, so like a lot from California, a lot from Chicago, also the Northeast as well. So New York, New Jersey, things of that nature.
Perfect. We're going to discuss this topic and more on the Loan Doctor podcast. I'm Rich Brandt, the Loan Doctor, with the Brandt Lending Team, and my guest this week is Aubreigh Hutchison with EXP Realty and the Hutchinson. Is it the Hutchison Group?
Aubreigh Hutchison Group.
The
Yes.
Aubreigh Hutchison Group.
Yes.
So Aubreigh is a real estate agent in Florida. Tell me, how did you get into real estate?
Wow, that's a great question. I'm actually born and raised in California, and I moved here for med school and really just fell into real estate. I get the, I guess, same satisfaction of helping people get into their dream home, maybe that they never thought that they could get into, except I'm not saving lives like you are, but as you are the loan doctor. But yeah, I get the same satisfaction of helping people get into their dream homes.
Now, before you got into real estate and were killing it in this field, what did you do before? What were some of the jobs that you had?
So right out of college, I actually did commercial insurance.
Okay.
I have my 220 license, so I did a lot of B2B sales. I specialize in contractors, workman's comp, and then decided I want to go back to school for med school, moved to Florida, and then fell into real estate. So I only had one job.
All right.
That was it.
But you were an athlete as well, right?
Yes, I sure was. I was a collegiate athlete.
Now-
Yes.
All right, perfect. So let me ask you this. For somebody selling a home, what are the challenges they face when they're moving from another area?
Really understanding our market, because our market is very different and we trend a lot differently, meaning that what's going on in the other side of the U.S. is not actually what's going on in our Florida market, only because we lag a lot, meaning we're a secondary market. So we deal with a lot of people's vacation properties, second, third, fourth, fifth homes. So I really have to educate a lot of the clients that are coming into Florida on our market. And then also, as you know, we're now moving into season because everybody wants to get out of the snow and come here for the summer because we have such winters, because we have such beautiful winters that we have an influx of people. So our market is the opposite of everybody else's.
Yeah, one of the things I also find is that the taxes in Florida
Yes.
and the property taxes in Florida and the insurance is a little bit higher than in most states because
Yes.
of the storms and stuff like that. As you mentioned, we don't have state income tax, but that is affected a little bit in the property taxes. So that does impact people a little bit. What about like coordinating like the moving and stuff like that? Would you help somebody with that?
Of course, we do. We're like a one-stop shop. We do everything. So we do a lot of estate and probate sales as well. So we go from, selling vehicles. I actually am doing 2 moving coordinations. One for a client that's actually moving to Tennessee, and another one who's selling his vacation home and moving back to Massachusetts, all of his items back to Massachusetts. So, we do that all the time. We do cleaning, light repairs. We help with and assist with people with everything you can think of.
Got it.
Yeah.
Now, tell me what's the difference between like a buyer's agent and a transaction agent?
That's a great question. So in the state of Florida, we can actually be a transaction broker, which means that we represent the transaction. So we can represent the buyer and the seller in one transaction. A buyer's agent is really just focused on, representing buyers in the transaction. So
Okay.
So it's a little different. So if you're the listing agent, you can actually be a transaction broker, represent both sides. But if you're a buyer's agent, you're only the buyer's agent in that transaction. Make sense?
Yep, absolutely.
Yeah.
Now, do you do in your practice? Do you do all 3?
Of course, yeah.
Okay.
Of course.
And you had mentioned before about helping somebody move. Like I know that you've told me stories about like where somebody's house wasn't in good shape to sell. What do you do to sort of help them get to a stage where they can get the most dollars for their house?
Yeah, I mean, we come in and we give them quotes in regards to, So our main focus is getting the family the most amount of money for the sale of the property. So we'll come in and we'll have quotes for anyone between like clean outs if they have a lot of clutter and everything like that. So we help get the property cleaned out. We help get the property cleaned. We'll do any type of light repairs as long as it's going to, like I said, get them the most amount of money. We'll do that. If it comes to like once they're under contract and they're ready to move out, if they need help with shipping anything or if they need help with moving, we also will clear out moving, put it in storage, or we'll actually help them with movers. So we have all the vendors that we've vetted for the last decade that we work with on a regular basis. So we help with quotes and things of that nature.
Got it. Okay.
Yeah.
Now, do you? I know just in knowing real estate agents a lot. There are some agents that only focus on listings and don't work with the buyers.
Sure.
And I'm just wondering what you do to help the seller find their next home, right? Because if you're doing a listing, that person's selling a house and he's got to go somewhere else if he's living there, right? What do you do to help them sort of navigate that transition altogether?
Like if they're moving local or moving out of state?
Either way.
So I'm with the Mike Ferry organization. I've been with them for, like I said, over a decade since I've been in real estate. It's my business coaching program specific to real estate. So I network on a regular basis out of state with the top 1% of agents. So I have a lot of connections with other agents that will take care of my clients if they're moving out of state. But if they're moving here local, of course, I'm going to help them, right? Because they know, like, and trust me to sell their home. I'm going to help them with the buy as well.
Can you think of a reason that some agents don't do that?
To be nice, I mean, I would assume they're just lazy, because when I look at it, because let's be honest, when you're a listing agent, you could have 100 listings, right? And you can work 9 to 5 and not work the weekends or anything like that. When you're working with buyers, you can only have a select few buyers. So I don't understand why, if you're selling their house, you wouldn't help them on the buy side, because you should be looking at it as a long-term relationship and wanting to help them, their friends, their family, and even their children for years down the road to have successful careers. So I don't know why they pass them off. I understand if there was a buyer that was coming in from out of state and maybe it wasn't in their price point they wanted to deal with, because there are a lot of agents as well that won't deal with certain price points, and they pass them off to their buyer's agents. Fine. But no, big or small, we sell them all, and we help them buy as well. So, well,
you said something that kind of resonated with me, and it's part of what we do. It's the relationship. It's not the transaction.
Yes.
I know that one of the things. It's funny just because it talks about this and the importance of the relationship is we have on my team, we have a pipeline meeting every week, and we discuss all the loans that we have in processing. And one of the things I had done when we go through this process is we took out the loan amounts. And the reason we took out the loan amounts is because I didn't want to discuss a scenario that had any impact on whether the guy was borrowing $1 million or borrowing $50,000. For the person, that's a big transaction. It doesn't matter the amount.
The biggest transaction usually in their life.
Correct. Yeah.
So absolutely, right?
Okay.
No, absolutely. I don't look at anybody as one transaction. I look at them as multiple, and that's why I really try to cultivate the relationship. And to be honest, a lot of times after I'm done working with my clients, they're like, "That's it," and I'm like, "I know, it's over," right? So I actually do have a lot of client dinners. And my whole family comes. My husband and my 2 children. We all go out to dinner all the time with my clients, and they almost become part of your family. And that's how I want my business to be. So.
Yeah, it's funny because I say that I look at the loan process and I work it as if even though they're not related to me, I work it as if they're my mother.
Absolutely.
Right. And then what ends up happening is even after the transaction, you become friends, and those long-term relationships are really where it's at.
Absolutely.
So now, recently, within the last couple of years, there was a change in the way that real estate agents get paid.
Yes.
In terms of commission and stuff like that. How has that change kind of impacted the strategy that you go about when you're helping people, or especially when you're working with a buyer?
That's a great question. And I know that a lot of agents have actually recently gotten out of the business because the decoupling of the commissions, meaning that the seller is no longer responsible to pay the buyer's commission. But At the end of the day, that's what a for sale by owner is, right? I mean, nobody is they were never responsible to pay for that other side of the commissions. It was just something that was expected. And a lot of times sellers still do the same thing. But at the end of the day, for me, nothing's changed because I show so much value to my buyers that they are actually willing to pay my commission regardless if the seller's offering something or not. It's just a great incentive or add-on for them to, okay, so if I charge 3% and the seller's only offering 2.5%, well, then they only have to make up the 0.5% difference, type of deal. Right. So, but they're more than happy to pay me my commissions. I actually do a lot of deals, sometimes, let's say, off market, and my buyers are more than happy to pay me the commissions.
So statistically speaking, would you say that sellers who sell on their own without the use of a realtor, are they netting more money than if they had used a realtor to begin with?
No.
Yeah. Okay. Why is that?
Because the real estate agent is really there as like the second line of defense, right? To really look at look at it as a transaction and not an emotional side of something, right? So like a buyer is always emotional and a seller is always emotional, and the agent is the middleman to really keep their emotions in line, right? So then that way they're not looking at it as oh, I spent 40 years in this home. I raised my family in this home. And then like somebody comes in and gives them an actual fair market value and they think it's a low ball, and then they never get what they want, right? A seller always thinks that their house is worth more than it actually is. And a buyer is always trying to get the best deal. So if you have a middleman trying to facilitate that, then clearly at the end of the day, nobody's going to be happy, but they're going to end up with more money in their pocket because they have somebody there negotiating on their behalf with logic instead of emotion.
Right. I think a lot of times too, a seller not working with an agent might list their house for what they think it's worth.
Of course.
And then the listing becomes stale and things like that. I find when I'm doing a refinance, one of the questions that we ask the homeowner is, how much is your house worth?
Right, of
and
course.
It's always 10 or 15% higher than what it probably comes in at.
Absolutely. So whenever I'm prospecting and then, I get a call that somebody's looking to list their house, that's a pre-qualifying question that I always ask them as well. How much is your home worth? Okay, great. $500,000. So if someone came in with a bag of cash for $450,000, would you take it, or would you think that was an insult? Right? So then that way you can kind of can see how motivated they are to sell and how realistic they are going to be, because when you do the comparative market analysis and you come in and you tell them, actually your home is only worth $430,000, then you can kind of adjust to see where they're at and how that's going to go, right? For more of a realistic of what's going on. Because in today's market, even when you say someone's going to put their house on the market, whatever's pending or whatever sold in the last month, buyers are still coming in 5-10% under market value. And you have to prepare your seller in advance, right? Because you are going to get that offer, but that's just the way the market is, unfortunately.
For somebody who might be listening that is thinking about listing their house, right? Other than calling you, which is the first step they should do. What's something that you routinely tell them? What are the 2 or 3 tips that you tell them to do right away?
In regards to what? Like improvements they can do to add value to the property?
Value. Declutter maybe.
Yes, of course. Decluttering is always one of the number one things, right? Because when someone wants to come in and look at their house, they want to feel welcome, like they can see themselves living in the space. And if you have all personal items and clutter, everybody focuses on that, and you're not going to get any attention. And then also paint. It's surprising. People are not visual at all. So they come in and they'll be like, I don't like this black wall, I'm out. But it's like that black wall can easily change to white, gray, whatever you want, but they can't visually see it. So it's difficult. So paint is like one of the number one things.
So painting neutral colors,
decluttering, and then also surprisingly, curb appeal. Make sure that when someone drives up to your home, it's inviting, because I've had buyers where they've driven up to homes and they're like, I don't even want to go inside. And it's like, well, you don't even know what it looks like inside. You can spruce up the flowers, you can do the lawn, but they won't even go inside. So it's important.
Those are great tips. What about staging?
Staging is great, but what I also say is, as well, is that, with the technology that they have out there, we can virtually stage very easy, so people get an idea of space. Because a lot of times, people will empty their property because they can, and they've already moved on and purchased and moved into their new home. So we do a lot of virtual staging for space and floor plans and things of that nature, so people understand. But staging is always nice as well. You sell quickly when you stage.
Okay. And speaking of, you kind of touched on like that digital staging. How is, and talking about that, how is like AI impacted your business, the way that you market or the things that you do?
AI has impacted my business significantly because of the amount of content you can produce through AI and get your name out there, right? Because it's all about a presence, especially when people are moving in from out of state. What do? They go online and they start researching the city that they want to be in, and you have to pop up, right?
Right. Sure.
I mean, if you want to capture that business. So I do believe that AI content generation and marketing online is very important to be found from out of state.
Now, does it help you like stay in contact with your customers too, from a contact relationship management type of framework?
So we do have some. I understand what you're saying. Yeah, we do have we do have a lot of things that are automated, but regardless of the automations, the one thing that I do try to do my best is continuously pick up the phone and call my past clients, my database, things of that nature, to get those referrals.
Right. I think that's the important thing.
It is the important thing, because your clients like that. I mean, the clients know, like, and trust you, and they want to hear about you and what's going on. So.
Right. No,
it's a personal touch.
That's the whole idea is AI. I think AI is a good supplement.
I agree.
Not a replacement.
Not a replacement.
Yeah.
Good supplement, though, yes.
Right.
What about in your business?
Same thing. I mean, we use AI a little bit. We use AI sometimes to analyze documents like that. It's going to help us to kind of streamline that process to make the loan process a little bit faster. But when it comes to interacting with people, I don't even have like a digital voice. It's when you call when you ring my office, you get a human being that answers the phone.
Same.
Yeah. And I think that's important.
I do as well.
Yeah.
But I do agree it does help the automation and expedite things, right? So you can attend to more people in a short amount of time.
Right. I can give more personal attention because I'm not doing some of the smaller tasks that can be automated, right? That isn't
the
interacting.
mundane, right. Administrative stuff. Yeah, I agree.
Now, when you're helping a buyer,
yes.
right, how do you help them navigate their wants and needs while sticking within their budget? What are some of the things you do to advise them?
Yeah, that's a great question. It's also pre-qualifying as well, and asking as many questions as possible, and really digging deep in regards to what they're really looking for versus what they have to have versus what they want, right? Huge difference, right? So it's like, okay, you have 2 kids, so you need a 3-bedroom. It would be nice to have a 6-bedroom, but realistically, you need a 3-bedroom, 2-bath, right? Because what you find is that if you don't have a great lender that actually pre-qualifies them in advance, they have really unrealistic expectations in regards to the amount of house that they can buy, meaning bedrooms, baths, square footage, different areas, right? So it's important to get your buyers pre-approved first. So then that way we can stay within that budget, because of course everybody wants the $1 million property when their budget's only $500,000. And if you're going out there showing $1 million properties, they're going to be very, very disappointed when they find out they can only afford a $500,000 property and what you can get in a $500,000 property.
Yes.
So that's the number one step. The first question when I'm speaking with a buyer is, okay, great, I understand. Thank you for asking all these questions. So have you already spoken with the lender or started the pre-approval process? No, I haven't. Okay, great. Well, before we go out and take a look at any of these properties, I need you to speak to my preferred lender.
Yeah,
the loan doctor.
Thank you. Thank you very much. So it's funny because I often say that people like looking for homes. They don't like necessarily getting a financial colonoscopy.
Yeah, yeah, exactly. Who does? I mean.
And so they tend to go to the real estate agent first. From a seller standpoint, if you're representing the seller, why is the pre-approval important?
Because I want to make sure that person can purchase my seller before we take the property off the market and miss out on another opportunity. So the first thing I do actually as a listing agent is, as soon as I get an offer and I in the broker MLS, it's required to show POF, proof of funds, if you're buying cash, or a pre-approval. And then once I receive the pre-approval, before I even actually present the offer to my seller, I contact that lender directly, ask them very specific questions in regards to the buyer, how solid they are, what does this look like? Can we have a shortened loan approval process? I want to make sure that they did all of their work up front.
Right.
So I know that the loan is going to go through and we are going to close. And a lot of times when you talk to people and they give you a pre-qualification letter, which is very different than a pre-approval, the approval shows that they've gone through underwriting process and they've collected certain documents to make sure that they are approved to purchase this property. A pre-qual is like, oh, let me call a lender that I found online, and then they ask you some questions over the phone and they're like, here you go. They haven't checked any of your documents. That's a big no-no. That's a red flag for me.
Yeah, I think one of the things that I find from that standpoint is that people use pre-approval and pre-qualification as if it's the same thing.
It's not.
Right. And so the trick is to sort of navigate and say, did whoever the lender is talk to this person and use that as the basis for giving him the letter? Mm-hmm. Or did he get documentation from this person, review the documentation, and then use that as the basis? Right. Right. And that's sort of the trick. And one of the things that really surprises me is how many people get a pre-approval letter from a lender and then get into the transaction and the transaction falls apart.
Are you kidding me?
Yeah.
How many times have I called you to rescue my loans? Right. And even the agents that I have on my team, I'm like, you need to call Rich. If Rich says that he can do it, he can do it, right? And you will say, you'll pre-approve them, you'll like ask them the questions, see if their buyers are pre-approved or qualified to do that. And the great thing is that you actually have a lot of different, loan programs, yes. Yeah. You have a lot of different loan programs that not other lenders actually have to push the loan through. Like for instance, the condo that you actually had for me, when all of a sudden it's like a week from closing, we can't do the deal. What do you mean you can't do the deal? Because the insurance changed within the process. Okay, great. And remember, I called you immediately. I'm like, Rich, this is what happened. This is why they can't get approved. Can you do it? Yes. If that's the reason why they said no, I can do it. And what did we do? We closed, 2 weeks later?
Yeah. So that brings me to sort of another question in terms of what are in Florida, we have a lot of condos. Yes. There's condominiums everywhere too. But what are some of the hurdles that people experience when they're buying a condo?
Insurance. So a lot of times roofs, right? So we have a lot of issues with roofs, which, maybe people haven't reserves budget, right? People haven't budgeted, the HOA hasn't budgeted for different things like painting and roofs and what have you. So what happens is that they try to I don't want to say cut corners, but they try to kick the can down the road and deferred maintenance. So they change insurance, and lenders don't like the way that these insurance policies are written, right? So they won't approve the loan based upon the insurance or the amount of insurance they have because everybody's trying to do deferred maintenance. That's a huge thing. And then also because of the milestones and the SIRS structural integrity reports that are coming out now with all these assessments coming up, the HOA fees are so astronomical that people can't afford them, right? So it's very important that, you check the minutes. And the reason being is because at the HOA, they're required to send minutes, right? So it's like, what assessments are being spoken about? They might not have assessments now, but which ones are coming up in the future? And you have to inform your buyer because they're going to close in a month, and then a month later, they're going to get hit with a $15,000, $20,000 assessment, and people can't afford that, right?
Right. No, absolutely.
So it's very difficult with the condo. It is really a crisis right now, I feel. So you need to make sure that your agent knows exactly what they're doing and what questions to ask and what documents to review to really protect your buyer. And then if that buyer is okay with what's going on in that building, okay, great.
Well, I think you're also protecting the seller because you don't want the seller to be stuck in a transaction that's just wasting everybody's time because the buyer doesn't qualify or doesn't want to.
Correct. Yes.
I think one of the things that is happening with condominiums now is I think they're actually going to be better in a couple of years.
Yes.
Right. Over the last few years, legislation changed, and now condos have to be run. You're kind of right now in a period where we're paying for the ills of the past.
Correct.
Right.
Yes.
And
a
then
lot
at
of
the
deferred maintenance,
Correct.
mismanaged funds, not having 10% in your reserves.
Right.
Yes. Mm-hmm.
Right. Now, at the same time, so that you don't fall back and have that same problem in the future, you also have to account for that.
Of course.
So essentially, the condos are getting double dipped, and you mentioned the association fees going up. I think that in a couple years, the association fees are actually going to go down because they're not going to be still paying for the sins of the past.
Yeah, of course, like all the deferred maintenance.
Yeah, no, absolutely. Do you think now is a good time to buy a condominium in Florida?
Yeah, I mean, absolutely. Hey, look, like there's a lot of condos and HOAs because of the law changes that are actually trying to be proactive instead of reactive.
Right.
So they are, like you said, trying to get these things in place. And a lot of times, a lot of the HOAs now, instead of just whacking their buyers with a huge assessment like a $20,000 assessment, they're trying to get loans in place to where you can have monthly payments, and it's a little easier to digest and accept.
Sure.
So I think that that's really helping a lot of homeowners as well, because the sad thing is that in the state of Florida, if you don't pay for your HOA fees, they do have the right to foreclose on your property.
Oh, yeah.
So, I think it's a little easier for people to accept. And I think it's going in the right direction. Like you said, it's unfortunate that it's happening now, but in the future, it's going to be, everybody's going to have 10% in reserves. You know what I mean? So it's going to make every condo building a lot easier to buy into. And also by doing certain things like putting 10% in reserves as a lender as well, like you can then offer FHA and 5% conventional. You don't have to put the 25% down, which a lot of people maybe don't have, right? So it's going to open the market to a lot of other buyers, or maybe first-time home buyers who can afford a condo, So I think it's a good thing.
Yeah, I think one of the things that I stress to people when they're looking at a condominium is that the condo project is getting an approval, goes through a process to be approved by the lender,
right,
the same way that the buyer gets approved by the lender.
right,
And the two things are essentially independent.
right.
Right. And so, and everything that the bank is looking for from the condo is, to a certain extent, self-serving. The lender wants to protect their investment.
Of course.
But it also wants to protect the buyer,
Of
right?
course,
If the condo association is getting sued, the buyer should know that. Right?
Yeah, but
if
you can't even lend on can you lend on in a community where there's a litigation going on?
Yes, it depends on the reason. So you can. It depends on the reason for the litigation.
Got it.
One of the things that happens with lenders, and we talk about the condominium, is that a lot of times when it comes to lenders, we all play by the same rule book. Most
Right.
loans are all done with the same rule book. It's getting the lender who understands the rule book,
Yeah.
so that they can do the things that they're allowed to do.
Is that why you're so good and you rescue all my loans? You know the rule book like the back of your hand?
That's the idea. That's the idea, right?
You are very smart.
Yeah.
You do make miracles happen, that's for sure.
That's right. I didn't go to loan medical school for a reason.
Yeah.
So now, for someone selling a home and buying a home at the same time, what are some of the challenges they face to do both things together?
We call it a simultaneous close, right? When you're buying and selling on the same day. The challenge is that when you sell your property, getting your money over to the other title company to buy the property and close in the same time. So a lot of times it's a lot of coordination. We do it all the time because we do have a lot of contingencies on the sale of someone's property to purchase another one. So we have a lot of contingencies. It just takes really good coordination and staying on top of people to make sure that that's going to happen. Like if you're the seller, you need to close in the morning so then your wire can go out and hit whoever you're buying with, that title company, it can hit that title company, you can close in the same day, so you're not homeless, right?
Right.
So,
Sure.
Yeah. It's easy, though.
Now,
we do it all the time.
We do it all the time.
Yeah.
That's awesome. Now, what are some of the rewards that you get out of the job?
Like I mentioned, I wanted to go to med school, and although I'm not saving lives, I mean, it's so rewarding when you get somebody into their dream home where they never could imagine that they could, ever be a homeowner. So that's really rewarding, right? When you make their dreams a reality, super cool. And you get that same self-satisfaction, right? Of, wow, I made your dreams come true. It's pretty cool. What about you?
You know what?
Same thing, right?
It's funny because, my team, we do 200 to 300 transactions a year.
Man, that's incredible.
And every single one, you still get that same feeling. Some of the great ones are where we call it a mortgage roadmap. Sometimes we get it. We're doing a pre-approval for somebody, and the person isn't ready.
Of course,
right?
yeah.
They want to buy it. Buying a home is a priority, but they're not ready. Whether it's credit, income, it could
Debt,
be
something of that nature.
yeah, it could be a number
Pay
of
down
different
debt.
things. And so what we do is we give them a mortgage roadmap. Then we give them benchmarks to accomplish over the course of the next 30 days, 60 days, 90 days, whatever our timeline is.
Right.
And then we follow up on it, sort of like your mortgage personal trainer.
Right. That's
right?
great.
I think you've had a personal trainer in your life.
I have,
Steve.
yes.
So yeah, it's kind of like your mortgage personal trainer. And so we're calling them, kind of being their accountability partner.
Right.
And then having them go through that process where they weren't mortgage ready, they become mortgage ready, you find them the perfect house,
Yes.
we get them the right loan and they close. There is no greater reward than that.
I agree.
And even the ones that aren't as great, every time it closes, I think I said earlier about the fact that it's like my mom. I'm glad that I never lose that, despite the amount of loans that we close. And you don't lose. Sounds like you don't lose it either.
No, every transaction, there's always ups and downs and quirky things and solutions you have to come up with,
Yeah.
and it's like you said, it's still self-satisfying, like even for yourself, of like, wow, I got that done, So and like I said before, it's like these people almost become your family, and you still go out to dinner and engage with them after the transaction, right? And they're still part of your life. So it's some of my, I guess, great friends also came from a transaction. So it's pretty cool, So it's self-satisfied, like it's enjoyable in that aspect as well, right? You never know what's going to come out of a transaction. So best friend,
Right. It's funny. There's also a satisfaction that you get when somebody who's making a life-changing decision,
of course, yeah,
puts their trust and confidence in you.
Right.
Right. I don't know, you could turn over a rock, you're going to find a real estate agent.
Yes, you are.
And to get a quality real estate agent, for somebody to recognize that and put their trust in you, has got to be very self-satisfying.
Yeah, absolutely. And like one thing that I actually just got 2 calls within the last not even 24 hours about like real estate agents and what they've done. And it's like, like I feel like you have to give value, and you have to really become an advisor and really educate your clients for them to really feel comfortable to use you, right? And to use you over and over and over again, and to put their trust in you. So for me, it's really, I want to make sure, and I take a lot of time with my clients, and I always tell them, look, hey, I do this on a daily basis. No question is a dumb question, right? Ask me anything and everything, because look, this is a huge life decision. I want you to feel completely comfortable, and it's not my money, it's your money. So you need to feel comfortable like moving forward with purchasing that investment, purchasing that property. I'm here to give you all the facts to make that decision and to help guide you. But at the end of the day, like, that's really important for me to educate my clients so they do feel comfortable.
I think one of the things that I've also noticed that you do is you talk to them in English.
Oh yeah,
I think a lot of times, we have real estate jargon, and the people who do what I do and what you do every single day talk in a language that the layperson doesn't talk into. And so you're able to kind of communicate your message in a way that makes people understand it and simplifies it. It's really remarkable.
Yeah, because I want them to feel comfortable, and I do this every single day. And I guess the question that I always ask them as well is like, okay, like, does that make sense? Do you understand, right? To reassure them that, hey, look, like, I want you to understand what you're getting into and what you're doing, right? It's important. So I appreciate that. Thank you for that.
It's funny too, because sometimes when I'm doing, when we go through the application process for somebody, I call it a high trust interview.
Sure, yeah.
Essentially what I'm doing is I'm asking them questions to see if the pieces of their financial puzzle work to accomplish their goal.
Right.
So I'm learning their goal, doing that. And at the same time, I'm trying to make sure they have enough trust in me to be able to kind of move forward and be the right lender for their purpose.
Right.
So yeah, part of that high trust interview is I'm actually surprised at how many people. I had something happen the other day where somebody got pre-approved.
Sure.
They told me they got pre-approved for a house for $450,000. And so I'm in the middle of doing my high trust interview with them. And one of the questions that we ask is, well, what do you want your payment to be?
Oh, I love that question.
And they gave me an amount, and the fact is, it doesn't matter how much you might get approved for. If you're only comfortable paying $3,000 a month, right? You're only comfortable paying $3,000 a month. So I think in this particular scenario, the number was like $2,500, and they were putting a little money down, like 10% down. So not that there's anything wrong with that, because there isn't.
Sure.
The only difference was the fact that they had an approval for $450,000 and were looking for homes that are $450,000 because of their pre-approval didn't resonate with their monthly payment at all.
No.
So then I'm like, well, if that's your monthly payment goal, we have to change what you're looking for. And the fact that somebody didn't take the time to kind of figure out what their goal was before kind of giving them a number, just, it's probably one of the reasons why we're both as successful as we are.
Yeah, I will say that, like, it's almost like reverse engineering, right? Because everybody always asks me, like, oh, what can I get for $3,000 a month? And I'm like, you know what? You need to call Rich, right? Because you got to take into consideration taxes, insurance, HOA fees if you're in an HOA fee, you know what I mean? Plus your mortgage. So it's like Rich will reverse engineer all that for you. And when you're pre-approved, let me know and I'll help you find that house, right? And there's been so many times where it's like, okay, this person, like you said, they're approved, but then their HOA and their insurance has to be within these certain numbers. And it's like, I send you the house and you're like, it's not going to work out, right? Because of the things that people don't really look at, which are those things, So you have to always adjust. And it's nice to have somebody on your side where you can just literally text the property over and you're like, yeah, no, they need to stay within this, this, and this. And if it's not within those guidelines, then unfortunately you either pay more and you're okay with paying a little more, because let's be honest, every buyer says they want $2,500, but then when they see the house that they want, they'll pay $3,000 for it, right? If they can.
So it's funny because one of the other questions that I asked them, I asked somebody if we were going to use just numbers in a scenario.
Sure.
Would you rather put another $10,000 down or pay $70 more a month?
Right.
And that just kind of gets me into a headspace of.
That's a good question.
Are they okay spending more money, or are they okay going a little bit higher in the monthly payment?
Yeah.
And because most people, I don't think, realize, sort of like what you were saying, is that when you get pre-approved, you really don't get pre-approved for a purchase price. You get pre-approved for a monthly payment. Then we take the amount of cash that you have on hand and we reverse engineer what that monthly payment would be based on estimating taxes, insurance, and HOA, right? If they happen to be one. And then you got to take into account what those real numbers are, because you could have two properties on the same street and their insurance be widely separate.
Why is that?
Well, I mean, you could have, if you're looking at a neighborhood you've got a newer roof, you've got impact windows or shutters and stuff like that. That's
for insurance credits.
Typically the biggest reason.
Yeah, that makes sense.
Well, if it has a pool or doesn't have a pool.
True. Yeah. Just out of curiosity, though, just because we are speaking about different loan programs, what do you think about the 50-year loan? That's I've been talking about.
Yeah, they're talking about the 50-year loan, and we have an affordability crisis in the U.S. I don't think the 50-year loan will fix the affordability crisis, because I think property values will go up, and unless we're building more homes to account for that, I don't think that's going to be great. The other thing that I don't like about the 50-year is that it's going to create more first-time home buyers in the short term. It's going to create more buyer eligibility. In the long term, it's not going to create more wealth, right? It's actually probably going to slow the economy down, because one, it's going to be harder for people to move up, because they wouldn't have built equity,
Yeah.
right, to buy that next house. And so I think so often when we do things, we have these short-term solutions when we really should be thinking about the long term.
Yeah.
Let's start with the end in mind, and how do we fix that and go back? And I think one of the other things that they're talking about is letting a homeowner transfer their mortgage to the next property, right? And one of the challenges.
How would they do that though?
Well, it's a challenge.
Yeah.
I think the biggest challenge, and many people don't know this, or many people might not know this, but an FHA loan is assumable.
Yes, I
right?
did know that. Yes. Okay.
And what that means is that if, as a buyer, I could take over somebody's FHA loan. So if they got an FHA loan in 2020, right, I could take over their loan, and my rate would be 2.5% or 3%. The problem is that home that you can assume the mortgage on also probably doubled in value.
Yeah. So
right?
if it was $200,000, now it's $400,000. Where are you going to find the $200,000 cash for the gap, right?
Exactly. So nobody's going to finance that $200,000.
Why? Because they'd be in second position.
They would be in second position, and they're not going to finance it as high a loan to value.
Right.
It's a mess. And so I think transferring the appraisal, if you transfer the mortgage, and you have a $200,000 mortgage, and you're buying a $1 million home, how are you going to come up with a gap?
I don't know.
Right.
That's what I'm saying. Yeah.
So I think
that
there are some solutions that they have to work on. I know I was telling somebody in my office, look, I don't get to vote on these things, and it's not my calling. But I think a solution that might help with the housing is if you did something with the temporary buy down. We have temporary buy downs now. The challenge with that is that right now when you get a temporary buy down, what a temporary buy down means is that you have a starting interest rate.
Sure.
Let's say the rate's 6.5, and for the first year it's 4.5 because you buy it down for 2 years, right? So the first year it's 4.5. The next year it goes 5.5. So you're paying, your monthly payment is paying as if your interest rate was 4.5, and it can save somebody hundreds of dollars on a $500,000 loan amount. The dilemma that we have now is that you have to qualify at the higher rate, at what the normal
like 6%,
rate, at the 6.5% rate in the scenario that we used. Exactly.
Okay.
And so what I would propose is if we did maybe a 5-year buy down, and then, but you qualified at the buy down rate, and the theory being,
how would you qualify at the buy down rate though?
Well, that's
what I'm saying. Like how, if you have to qualify at the 6.5, how are you gonna position that?
Well, because you're going out 5 years. That's why they kind of let you qualify at the lower rate. It would be a concession, but my theory would be the theory that I think why it would work.
Concession from the seller, or what do you mean? Concession?
No. In other words, that would be something that the lending, the secondary market lenders would have to kind of decide, does this make sense?
Okay.
But here's the theory behind it because of the 5 years. It stands to reason that if I'm going to make more money in 5 years from now than I am today.
Sure.
So the fact that my payment is going to go up is still likely to be affordable because of the fact that my income is going to increase. Think about it if I was a renter. If I was a renter, my rent is what my rent is today. And in 5 years, my rent's going to be bigger, right? If I'm staying in the same place, I'm going to be paying more in rent. So I just think it would be a more viable solution. I don't know if anybody's listening that would do it, because it's not up to me, but I think it would be a little bit more viable. The other thing I wouldn't do is I wouldn't offer it to everybody. It should be based on need and not based on want. I think.
So then let me ask you this, because I think where a lot of buyers don't understand, because maybe their real estate agents aren't educated on the buy down, is that they don't understand, like you said, it's like 6.5, right? And then you buy down for 2 years. So then the first year is 4.5, the second year is 5.5, the third year you're going to go back up to that 6.5. And what they don't understand is that buyers don't understand, yes, your mortgage is increasingly going to go up. So you have to be okay with, as you would educate them on where your 6.5% rate is going to be. But the whole purpose, from my understanding of the buy down, is really because, okay, the rates are so high now, but hopefully in 3 years they'll drop and they'll be less than the 6.5%, so you can refi at that rate. Like, what's the whole purpose of the buy down? Because that is what I assumed. But then if you think about it, are the rates really going to go down that significant in 3 years?
Well, I think that lenders that are using that as the impetus to do a buy down are taking a really big risk on the borrower's behalf.
Why do you think that? Because I think that's where the lack of education is, right? From a buyer standpoint, because I've had buyers come and ask me things, and I've actually reached out to you about certain things about the buy down as well. Like their husband's sister is a real estate agent, so she's not explaining it, so they come and ask me. So I guess the point that I'm getting to you is that trying to predict what might happen in 3 years, right? Giving them a buy down now with the idea that they're going to be able to refinance as a guarantee is very risky. So
right?
then what's the purpose of the buy down?
Yeah, that's a good. So typically, the way that I use an interest rate buy down is let's suppose it's not right for everybody, right?
Okay.
What it does is it makes the house more affordable now, and so the times that it makes sense to use it is, let's suppose you have a low rent payment. Right, and you could afford another $1,000 a month in mortgage payment, right? But you've only been paying 15, right? I'll use 1,500 just as a low number. We could use 15,000, but for the purpose of our call or our talk right now, we'll just use 1,500.
Okay.
And you're going to a payment of 25. It might be easier for you to go from 15 to 18. Then 18 to 21, then 21 to 25, rather than just start at 25, even though you could qualify for the 25, just because you're not used to managing your money that way.
That is very smart. And like sometimes when you're talking to a renter or whatever, you kind of use that same scenario as well. It's like, okay, so like, let's say you're looking to they talk to Rich, they're not mortgage ready. They're going to be ready in like 6 months. So like over those 6 months, like in order for you to get mortgage ready, why don't you start with, okay, 1,500, and then the next month, why don't you save 1,600, and then the next month, right? So it's more digestible because it's incremental rather than a huge, like, okay, $500 to $1,000 more a month, right? So that's really great way to explain that. Not very many lenders, I think, like you said, educate their clients properly. And like you said, it's like everybody, it's just like a trendy thing of like, do a rate buy down. So every buyer's coming in asking for a rate buy down. But according to you, it's like, that's not the best case scenario for everybody. So that's great.
Right.
You really have to understand your buyer.
I think that it's funny because I talk about this too. We have a mortgage there's reverse mortgage. Of
course,
right?
Yeah.
And reverse mortgages are great. They're fantastic for the right person. And what ends up happening in my industry is typically people who do reverse mortgages get paid more for a reverse mortgage than they do for a conventional mortgage, right? And so, but what tends to happen is they give people a reverse mortgage who shouldn't necessarily have a reverse mortgage. The same thing with the buy down. We have a mortgage called an all-in-one. It's an offset mortgage, which I'll talk about another time. But again, the same kind of things. Not every mortgage vehicle is right for everybody, and you have to be really careful because you could stick somebody in the wrong, give somebody bad advice, or put them in a difficult situation that they shouldn't be in. The other thing that we use a temporary buy down for is, let's say you have somebody who's gonna, like, they started a new job and they have an expected increase in income over the next couple of years.
Like an offer letter or something of that nature?
Right. Well, they have an offer letter, but maybe they haven't gotten a
something.
bonus yet.
Right,
They're expecting to get a bonus.
Right.
So because we know their income is going up, managing their payment now until that change takes an effect makes it a little bit easier for them to sort of do what they have to do.
Yeah, that's really great. See, that's why you're so great at what you do, because you really look into everybody's situation and what's best for them. Not what's best for your pocket, but what's best for their pocket, which is very different. It's kind of like just like real estate agents, right? It's like, okay, everybody's always looking after like the money that's going into their pocket instead of their client's best interest in mind. And I think that like really makes a huge distinction for lenders and then also real estate agents, like the way that you work and the way that I work. That's probably why we work so well together, is because we always put our clients first, regardless of what it does for us.
Yeah,
which is very different.
Yeah, if you do the right thing and you put your clients' needs ahead,
Yeah.
like the economics of it just kind of take care of itself.
I agree, yeah.
You
But I
know?
don't think most people look at it that way.
Yeah,
In our industry, right?
no,
In our industry.
there's a lot of people who don't.
Right. I agree with that.
Yeah, there's a lot.
Yeah.
So when buyers start their home search, what are some of the things that they're most worried about? You know, is it price, monthly payment, taxes, insurance, something else?
Yeah, I think that it's all of the above, right? Because especially the first-time home buyers, because they don't know what to expect, right? And they're coming from, let's say, a renting situation where the landlord takes care of everything. They just pay their monthly bill and that's it, right? And then they don't understand, like, what's behind being a homeowner, right? Like taxes, insurance, HOA fees, maintenance, just regular maintenance of a home. If you have a pool, if you don't want to mow the lawn and you have a gardener, you know what I mean? If you have your AC goes out and that's an extra $10,000, right? So it's like it's really just important to let them know, hey, look, being a homeowner is completely different than being a renter, and these are the things that follow. You know.
Now I know while we've been talking, we've been using examples of 400,000 or 1,500, some low number. But you work with clients that are buying homes in the millions of dollars as well, right?
Yes, all of the above. But typically, like a lot of ultra luxury, they have cash to buy, right? They're not. Sure. We're not dealing with like mortgages, and their financial situations are a little different. And it's more of like a business transaction. Do the numbers make sense? Yeah. Okay, great. Let me move forward. Whereas I would say $1 million and below is more of an emotional transaction. Mm-hmm. People, are emotionally tied to these things. And that's where I try to like educate them as well, because, right now it's a different market. It's a buyer's market. So buyers have a lot of inventory to choose from. And if they don't get one offer, if they put an offer on a house and they don't get it, there's others to choose from where, now we're going into season, and now with everything going on politically, they say we're going to get a huge influx, which is going to create somewhat of a frenzy, kind of like COVID or what have you, So I would say, like, if your offer doesn't get accepted, don't get emotional about it, right? I feel like I really have to educate my clients of like looking at it as a business decision and not an emotional one, because when it becomes emotional, they get, I don't want to say crazy, but do you know what I mean?
Yeah.
It's like you got to look at everything as a business transaction. And when you put in a lower offer and the seller doesn't even counter back, don't be insulted, Mm-hmm. Like, it's okay. Don't take it personal. Like, there's a lot of personal things you got to set aside and look at everything as a business transaction. And that's what I try to tell them so they don't get emotional.
Now, speaking of what's happening with the political climate, like we talked about earlier, what trends do you see over the next 12 to 24 months that help people reevaluate where they want to live?
Well, if the governor takes away property taxes, I mean, come on, It's supposed to be implemented in 2027. So within the next 12 to 24 months, I think there's going to be a huge change in Florida, like a huge influx of people coming, especially I think like wealthy people, because we have no state income taxes, I think that I think that it's going to affect, like we were discussing earlier, I think like a lot of wealthy people that are moving into our area, I think it's going to affect more of the jumbo loans and or the luxury market more than I think like the traditional million and under market.
Right.
I think that's where it's going to mainly affect. But I think that there's going to be, if we get rid of property taxes, I mean, how do you feel? Like, where are we going to get the other funds? Like, we've got to figure out where the other funds are going to come from before clearly that gets passed. But
yeah, I mean, I think that's the worry. One of the other things that I just find, interesting. And I don't know if interesting is the right word, but our property values keep going up, which means our tax basis keeps going up. Yet the percentage that we're taxed on doesn't seem to go down.
No.
And so, that should somehow resonate. But I think once you start to give the government money, it's really hard for them to not take it.
Mm-hmm. So how do you feel like in regards to like what you just said with like everything? What about people's salary and income? Do you think that it's going up like sequential or no? Like, what I mean? Because then what about all the locals that are here? You think they're just going to get priced out of the market?
Well, I think they've got to do some things to help with affordability
Yeah.
in Florida and in lots of other places.
Mm-hmm.
I think affordability is a big deal.
Yeah.
Um, and kind of talking about affordability, one of the things that I want to say while you're here, because we talk about first-time home buyers, and I
Sure.
know actually, before I say what I was going to say, let me ask you this.
Sure.
You work with renters,
Yes, of
right?
course.
What do you do to transition renters to turn renters into home buyers?
Send them to you.
Oh, all right. That's a
Send
good
them to
answer.
you.
That's a
Have
good
them
answer.
do their mortgage roadmap to make sure that they,
Okay.
if they are mortgage ready today, okay, great. I mean, we've done that. We've transitioned renters into,
Yeah.
speaking with you just to see where they're at. They happen to be mortgage ready, so they actually purchased their first home, right?
Right.
And if not, put them on a plan to get mortgage ready to eventually purchase their first home. So
One of the things, and the thing that I was going to say that I didn't pass on was down payment assistance programs.
oh yeah, the SHIP program that we did together.
Oh yeah.
Oh yeah.
I get a lot of calls for people wanting to do down payment assistance, and a lot of people push it, market, and advertise it. And I'm going to say down payment assistance programs are great for people who need it.
Yes.
They're not great for people who want it, right? They're designed to fill a need, right? And most people get the perception that it's free money, and it's not free money. And I'm not saying they're bad, because they're not. They are great because they help people get into a home that otherwise couldn't. But
So what do we call those types of government-assisted programs that they think they're a grant and free money, but they're not? What happens?
Well, I think that's just a matter of education and stuff
That's what
like
I'm
that.
saying.
Yeah.
So like that, I have that question asked all the time, and I'm like, hey, look, you guys, it's a silent second, meaning it just sits there until when, Rich? You refi with Rich, or you turn around and sell, and then you have to pay that back, right?
Well, there are some programs that it's forgivable. There are some programs.
But how long does it take for it to be forgivable? 50 years?
No, it could be 30, it could be 10, it could be 5.
Cool.
There are differences.
Don't you think those would be great programs though?
They're great
great.
for people who need them. Typically what happens is when you have a grant that is forgivable, what you're doing is you're actually getting a higher than market rate on the first. So essentially what you're doing every month is paying the grant back. So if you're in the house for 5 years, even though the grant was forgiven, your payment was so much higher that you paid it back. And again,
so it's really not free because you're still paying it. Essentially, you're still paying it back like that, right?
Correct. And so that's why that want and need part is a really big kind of distinction. I do first-time homebuyer programs all the time for people who need them. It's not free money. So for people who just kind of want them, and that's part of what I do too, is explain to people, look, if we don't do that, here's what we can do.
So you mentioned first-time homebuyer. So you're saying that the government-assisted down payment programs, they're only for first-time homebuyers? Or are they open to other candidates?
So there are different programs that there are things called opportunity zones and stuff like that.
Okay.
There's a plethora of different options that are designed, and our job is to find the right one that fits when it's called for.
That's great. Yeah.
So let me ask you this: have you ever done a transaction where that like changed somebody's life that you just kind of remember? Tell us about that. Just something that has stuck to you over the years.
I don't know. That's a great question, Rich. Putting me on the spot. I mean,
Yeah.
I would like to say that every transaction is like that, right?
Hey, that's great. No, that's it. That you know what? That's the right answer.
No, I guess I would really say this. I would say that, because I do like a lot of estate and probate sales as well. I deal with a lot of attorneys in the area also. I would say that when you have a personal representative, because it's such a stressful time in their life, just losing their loved one and them inheriting a property and they really don't know what to do and they're so stressed out. I guess it's really great when I'm able to really take them in, help them, have them trust me, do everything. I mean, I've sold vehicles, I've changed locks, I've gotten rid of firearms, I've done everything. And then at the end of the day, they turn around and say, thank you. Like that, I think, is the most rewarding because they don't know the market. They live out of state and they don't know anyone to help service and trust them. And let's be honest, Florida is the wild, wild west. Like you can't just trust anybody, especially with the biggest asset it's your inheritance.
Sure.
So I really try to treat them as you do, like they're my family as well. And what would I do with my family, and walk them through the steps and guide them as much as possible, especially through the probate side of things, because it's very complicated and stressful and difficult, and just try to take all their stress off of them and deliver them with the most amount of money that their family has left them. It's very rewarding, and I would say those are the ones that really stick out to me.
No, all right, that's great.
Yeah.
Now, when you're not helping home sellers and home buyers,
Mm-hmm.
yeah, what are you doing in the Sunshine State to take advantage of your time here? What do you like to enjoy? What do you enjoy when you're not working?
You know what? Honestly, I spend all my time with my husband and my 2 little children, and that, like experiencing things with my kids for the first time is like the best thing known to mankind. And like, they're so weird and quirky, and like, you just look at them and they make a weird noise and you can't help but laugh. So I guess like for me, that's brings me joy, spending time with my family. And my mom and my sister live here. So, I'm very family oriented.
Nice.
What about
nice.
you?
No,
You travel.
I travel.
You travel.
I
Good
do
for
like to
you.
travel.
You should be traveling.
Yeah, no, but one of my favorite stories is with your daughter. When we used to talk all the time,
Yes.
and your daughter would pick up her toy phone and say, "Hey, Rich."
Yes, all the time. That is a good story. Yes, she loves you. So.
All right. So, well, that I appreciate you being on the Loan Doctor podcast.
Yes, thank you so much for having me.
Yeah. For those of you who are listening, thank you for being in my waiting room.